the lunch, we welcome back all our audiences once again. We shall now move on to the Fireside chat on the topic financial inclusion, leveraging fintech to bridge the financial divide. Financial inclusion through fintech is closing the gap by providing accessible banking services to undeserved communities, empowering them with economic opportunities. Our speakers this afternoon are going to be, first and foremost, Ms. Sugandh Saxena, CEO, FinTech Association for Consumer Empowerment. Warm welcome to you, ma'am. We also have with us Mr. Vaibhav Joshi, founder, EasyPay. Good afternoon. We have with us Mr. Amit Tyagi, CEO, PayWorld Digital Services. Warm welcome to you.
Thanks, Muskan.
And of course, our moderator, Mr. Suparno Bagchi, COO, Balance Hero. A very warm welcome to you too.
Thank you, Muskan. Thank you so much. A very good afternoon, everyone. Good afternoon to all the audience. And again, thank you to all the panelists for taking time out and to kind of volunteer to share their perspective on this topic. First, as Muskan mentioned about the topic, right? I guess there is a strong level of validation that how fintech has been at the forefront of driving the financial inclusion mandate. Therefore, what is the opportunity in the next 30 minutes? Our humble attempt would be to kind of double clicking some of the areas. And we want to kind of understand possibly how the journey has been thus far. We also want to appreciate maybe in 1 or 2 quarters, how fintech actually has validated and pushed the mandate around financial inclusion. We will a little bit dwell upon the top challenges which the fintechs are facing, right, with that entire endeavor and mandate of driving financial inclusion. And possibly if we have some time, we will also do a little bit of a dwelling and crystal balling in terms of the aspiration what we have in the next 12 months. And again, if any specific questions also from the audience, we'll attempt our best to take it up. So that's the overall construct of how we would like to spend the next 28 minutes precisely. Before I kind of go to Sugandh to begin with, I just wanted to give also a context around what's financial inclusion, right? It's a terminology which we all kind of use. At times we use quite liberally, but I think it's also very important to appreciate that it's a spectrum and a journey. Possibly the journey starts with as basic as financial literacy for the consumer and the user and the people, to the extent where going not only we're talking about inclusion or dividing, let's say, or bridging up, let's say, infrastructure or a divide, but actually to going to the other side of financial well-being. So it's a journey and a spectrum. And as we all would appreciate, right, we live in a fascinating country, which means it's not one size fits all. So from that aspect, we would like to kind of double click a little and see what it means for financial inclusion and how the journey has been. As fintechs, I believe there are 3 A's which have been pivotal in terms of pushing the FI and the serviceability mandate. One is availability, the kind of products and services we are making available for the user. Second is in terms of the accessibility, right? We are talking about not only 24/7, but we are talking about, let's say, the 19,000 odd pin codes being served by the fintechs, right? And the third, and very importantly, the aspect of affordability and the cost of service. So just keeping that as a construct, the aspect of availability, of affordability, accessibility. Let's see how fintechs possibly is actually going to drive the mandate thus far and from here on. So with that, Sugandh, first I'll come to you. So given your vast experience, Sugandh, right, in the years which you have spent in the microfinance industry, the years which you're spending in the digital lending industry, and with your vantage point, what you have as the CEO of the industry association body, right? If you have to assess the journey of FI, right, the journey of financial inclusion in India, how would you see that thus far, how it has been?
Yeah. So, just like all of us, I think we are student and practitioner of financial inclusion, right? So it's a word which keeps changing its name, I guess, in some ways or form. And I think even in very early sort of countries' history, we have seen the pushes from the policy side for the financial inclusion. And even if I take that 50 years separately, where, a lot of it was really synonymous with, in some ways, state intervention, right? It was a priority sector lending, very focused and targeted interventions for farmers, rural areas. So this is how the whole focus was. It was really the state's prerogative in some sense to push for the financial inclusion. Fast forward, we come to, I guess, microfinance. I think that was the first real effort where private sector got involved in something like financial inclusion. And they said that we can do something in a sustainable, profitable way. So the genius of Professor Yunus and for microfinance in Bangladesh and elsewhere lies in the very fact that the first time we thought that poor, as we call them, or whatever low income group, there are different ways you can describe them, but they are the ones who need financial services to improve in the economic ladder. And you can provide them credit and other financial services in a very sustainable way. So it was a very, I feel it was a magic in those days that, you can do something like that. And microfinance was also very unique in a sense. One, of course, the private sector participation, which happened through, NBFC and the private equity coming into the space. But also the very fact that women were the center of it, the way, we talk about digital data, but the way they used to capture social collateral data, right? That was first time when you had a proxy for security, right? Unsecured thing, but, social collateral behind it. So people were vouching for each other. Something which we do in digital lending. Now we are looking at alternative, but that was, I guess, first alternative data point that we thought would come. And people would, we will pick that and use it to give loan with the asset quality where, PAR was less than 1% for the longest time, right? 20 years of the microfinance. But of course, as you said, Soparno, India is a very complex country. 20 years of microfinance, we have seen a huge demographic shifts overall, right? Generational, of course, there's a whole new generation which is coming, which is young, which is more educated than what it was. They're also living in urban areas and part of gig economy and very tech savvy. So obviously microfinance, because the construct was very different, community-based, so, GLG model, perhaps this was not attract, what this segment of people want. And therefore, and even there we saw, Equitas is here, Weber has worked with them and they started with the premise of urban microfinance, but obviously in the same sort of setting, which holds water for some customer segment, but perhaps not for all of them. And this is where I think, very well, the fintech or the digital journey comes in, because the time is right. We have this technology, young people, smartphone and whatnot, which are all the, demand side factor, which gives us positive wins to drive on. And fintech has been able to really meet the aspiration and needs of these journey. So I think for me, it's a very, good development that we have seen the financial inclusion from very state-owned, static approach to one which is very really collaborative. And if I have to take some of the key examples where it has been very successful, whether in microfinance or fintech, is really about people who think in a very customer-centric approach, the companies or the industries. And when I say customer-centric, not just giving them good experience or dry product, but really rooted in their realities of livelihood. So microfinance was really unique and smart to say that, we will provide financial services at your doorstep, bringing women together, because we know in rural areas, women don't have agency to go out to the branches and things like that. So it was really deeply entrenched in their socio-economic, emotional milieu in that sense. Similarly, for digital lenders, I think we have seen, unless you really satisfy what they want, the way they want, and their experiences, you will not go very far, right? People are very demanding as a consumer, and they would only accept what is there. Second thing, I think we should not ever estimate what regulator and policymakers have done in terms of providing us clear framework, which has been very instrumental in terms of what we are able to achieve. We could not have imagined the way fintech lending is thriving is precisely on the stack and public policy support that we are getting. I think that is something which is important, and it's very progressive, to help us do things. Third bit, which I feel is very important, is really the ecosystem level effort, because industry do not or companies do not thrive in isolation. We all thrive when Suparno thrives, Vaibhav thrives. So this is how I think is important. And just think of example of Amit has been in the credit bureau, how critical credit bureau ecosystem is for all of us to do it in a sensible way. Similarly, there are a lot of initiatives which I feel are important overall if this industry has to evolve. Credit bureau is one example. We are struggling a lot in terms of cyber fraud issues and things like that, which I guess we will talk later on. But when we are talking about a scale which is as massive as what fintechs are doing, there is a much more greater responsibility for all of us to come together and build an ecosystem so that all of us can work in a way which is following certain standard and ensure the customer protection. So I think this is where I would come from, where I see financial inclusion going. And I think you also were sort of touching upon what impact we have created. So again, our jury is out, and I'm sure it would always be out, what microfinance did and what fintechs are doing, because after all, what are we patting ourselves for, right? Ultimately, if we are not really moving the needle for the consumers. So I guess early days, but we underestimate what we are doing. The sheer thing that people can take loan few seconds on a phone is hugely empowering for consumers. And we see this from consumer that, how they are able to solve their basic need, emergencies. We think this for granted, right? Why would somebody take loan of 10,000? But for those people, this is something which is very powerful. We recently did a survey, I just want to share about it, where we were looking at the impact of financial fintech services. So we took this survey with some of our 3,000 customers of our member companies, and this was done by Dwara Research very independently from us. And even if you sort of factor for economy and education, it was showing that people who access fintech financial services, they have better resilience, they have better, ability to deal with opportunities and risk aside, both whenever they come. So I think, early signals do sort of attribute to the fact that fintech is playing a very important role for people to improve their well-being, because ultimately this is what we are for. And I think if we stick to the basic principle of ensuring that customer centricity and customer protection, I think runway is large enough, pie is large enough for all of us to collaborate and compete all that together at the same time. Yeah.
Oh, absolutely. I mean, this. Thank you, Sugandha. It's really fascinating. And if I have to kind of, just in brief, do a replay. You kind of really touched upon all the parts, right? That aspect of like not only the fintechs doing through their technological interventions, but the role play the ecosystem has. Fintechs can for sure be the enabler, but to really push the serviceability of the market, be it be on the supply side or be it be the other ecosystem players, including the regulators. One thing I must call out possibly, and it's also an opportunity for us as a fintech to think through, and in some cases also rewire, like, it's the regulators are not the speed bumps, they are the guide rails, right? So with that kind of an approach and wiring, possibly, I think there is always a huge opportunity, and making sure that that aspect, even in the lending space, as you called out, that aspect of being a responsible lender. So again, thank you, Sugandh. But moving on, Vaibhav, though Sugandh mentioned about the impact which fintech is doing, she also referred to the report which was recently made public as well. But let me be the little put on the devil's hat or be the naysayers. Is really fintech making a difference? If you have to, based on your own experience and based on the vast experience which you have, Vaibhav, could you, and especially for the audience, right, could you help with maybe some of the indicators or some of the examples which give that level of strong validations that, hey, it's not just a hype, fintechs are really making a difference? So what do you, Vaibhav?
Thank you, Suparno, and some very good points made by Sugandh over there. and let me actually build on top of what she said and, try to give you a relevant answer. So Suparna, when we talk about fintech, okay, I classify fintechs in two primary categories, and then there are a lot of subcategories. So one is the fin first and one is the tech first. When we talk about the fin first category of organizations, then primarily these are the fintechs that focus on the distribution part. And when we talk about the tech first category of fintechs, these are the fintechs that actually focus on the tech infrastructure part. Now, both are extremely critical because the tech infrastructure fintechs, they actually help make banks, NBFCs, and financial institutions more agile so that their products become market friendly, distribution friendly. And then the fin first fintechs can actually easily consume those APIs or those tech stacks and then distribute those products using their agile distribution. Having said that, why I'm raising this point is because India, from a regulatory perspective, has very clearly laid out regulations which talk about not just the measurable parameters, but also the engagement model and the risk and the compliance ownership as well. The onus always falls on the regulated entity at the end of the day. Okay, so whether it's a bank, whether it's an NBFC, whether it's a regulated financial institution, the compliance of that product falls on there. And that is where it is critical for fintechs, the role that they play in the tech first to make sure that those compliances are met, and in the fin first where the distribution happens. Now, if you talk about fintechs as a whole, Suparna, then there are three primary parameters that they generally measure on. One is the growth stage, one is the engagement stage, and the third is the monetization stage. Okay, growth stage is where the fintechs would spend and they would bring in a lot of customers. Engagement stage is where they would actually engage with those customers, and monetization stage is where they would actually want to monetize that particular customer through an upsell or a cross-sell kind of a thing. But if you look at somebody like a RBI, okay, then RBI's quantifiable parameters would be extremely different. They would talk about access, they would talk about quality, they would talk about usage. Okay, and these are parameters I'm talking about from a financial inclusion perspective. So the question really here is, how do you marry the quantifiable parameters that a fintech is talking about and that a regulator is talking about? Okay, and that is where that is where both digital and phygital models, and I'm talking about phygital because Amit is here from Payworld, representing that part of the industry. So both models have done tremendous work over there. You also asked about my experience. So let me share some of my experiences. Okay, whether we talk about a B2C, whether we talk about a B2B, or whether we talk about a B2C kind of a distribution done via fintechs, what happens is the last mile connectivity and availability with the consumer, how fast you are able to onboard a consumer in a non-brick and mortar setup, traditional setup that a bank or a NBFC has, how fast you are able to evaluate that consumer, say create a financial profile of that consumer through using a credit AI, how fast you are able to propose a loan to that consumer, propose a product to that consumer, or open a CASA for that consumer digitally, or help the consumer with services like AEPS-based cash withdrawal, cash-based DMT, BBPS-based bill payments, etc., etc., etc. Whether it's payments, whether it's liabilities, whether it's asset, how fast you are able to do that. Okay, that last mile comes into play. So if you talk about digital, then fintechs have done a tremendous job. We have all sorts of bureaus sitting at the back whose APIs are ready. Okay, so fintechs today just need to take those APIs from those fintechs, and trust me, within a minute, within 30 seconds, you have the entire profiling of that customer. There is a lot of alternate data, Suparna, which is available. Okay, so you do a social media scrub, you do a GST scrub, you do their business data scrub. Then you marry these two data and you have a financial 360-degree financial profile. You have his GPS, GIS, coordinates, and then you are able to find out what kind of a geography he stays in, etc., etc., etc. So onboarding because of video KYC, earlier because of eKYC, is also very fast. Okay, so that's one part of it, and fintechs have been doing a tremendous job over there. So much so that today banks and NBFCs also ride on fintechs to outsource this particular thing to them. Customers don't need to go to the brick and mortar branches anymore. Okay, then we talk about the product piece, which I think, Suparna, you specialize more than any of us do. And unsecured lending, today we have products where the loan can actually be disbursed into the bank account in 1 hour for businesses and in a matter of minutes for consumers. Whether we do it on a B2C model, whether we do it on a B2B2C model or whether we do it on a B2C model directly with consumer-facing app, right? If I talk about sectors, then, I think as a sector, one of the most under-penetrated and promising sector is the MSME segment. With, the last data, I think five years back, we have the data, 63.5 million MSMEs, 42.5 million SMEs in India. Okay, mostly in the micro space. I think there is tremendous scope. Now, RBI has put out the regulatory parameters and the fintech parameters of, measuring their own success. I think fintech in India has really successfully done that. Even till the last mile, we talk about tier 4, tier 5. I'm sure you will find a VLE, village level entrepreneur, a CSP, customer service point, who will have some kind of a device, who will be able to assist the customer for all sorts of services in assisted model. I'm sure my friend Amit will talk more on that. But at the same time, that same tier 4, tier 5 consumer will also have a smartphone, which will have access to all these financial services. Okay. Now, if that is not financial inclusion success, what is it? I think the trinity of JAM, Jan Dhan Aadhar Mobile, has really laid the grounds. And on top of that, we have started building extraordinary blocks. Thank you, Suparna.
No, thanks to you, Vaibhav. Really appreciate the way you have called out. You also mentioned about the public infrastructure, which has been, I think, one of the core tenets for India as a country and the way we have been able to do it. So just moving on, Amit. So we saw the context, we saw the possibilities also, which Vaibhav mentioned, and how actually fintech has been moving the, not just moving the needle, really propelling it. But there are challenges as well, right? We all are on the trenches. So on a given day, maybe there is a battle out there, maybe it's a war out there. So if you have to really express like what are the top maybe 2-3 challenges which we as fintechs face, especially towards pushing our journey on FI. So if you could elaborate from your experience, Amit, please.
No, thanks, absolutely. But see, I think you kind of started off with a very good framework, the 3A framework, right? I think if you talk about that, maybe we've done a lot of good work, on the affordability side, but the availability and the accessibility, really kind of need some bit of, more effort from our side. So let me just kind of, take a step back, because we are all partisan practitioners in this space, and we would like to give ourselves a lot of credit and, apportion a lot of the blame outside of us. But one of the biggest challenges probably a bit of status quo is thinking, or the inertia, or the sort of, people like us syndrome that, we all kind of, are afflicted with at a conscious or a subconscious level, right? We are all people sitting in India in air-conditioned offices and trying to design, second-guess consumers and access providers sitting in the deep rural parts of the country, right? Which means we assume, oh, great, what I've done, I've kind of created my app in Hindi, Bangla, or Telugu. Wow, accessibility tick, right? Or we would like to believe that, hey, you know what? All this means is my app used to be 120 MBs. I have compressed my app down to 70 MBs. The person saves this much on data. Well done, us. Let's kind of, celebrate. Unfortunately, that's, not even a half a step in this direction, right? Obviously, a lot of us, and, it's not like we only deserve the criticism. We deserve a lot of, pats in the back as well. But I think there's a lot more that needs to be done to make products really inclusive, right? Now, again, beyond the buzzword, that's genuinely voice first. Right? Beyond the buzzwords, that is genuinely empowering a local trust island to kind of, capture that trust and, direct it onto legitimate and beneficial products for the customer. Because let's not forget, right? What information asymmetry does is kind of levels the gap between a fraudulent and a genuine product. And that's the biggest sort of challenge. And, I'm sure all of us can kind of have this anecdote. All of our cousins who started working late 90s, mid 90s, they sort of corrupted an entire generation against credit cards. Right. So if one person in a small hamlet or a small village has a negative experience on picking up a digital product, we've unfortunately, kind of have a deep mistrust, a seed of deep mistrust planted in that. So I think one of the bigger challenges is our status quo is thinking. Second is, one of the things that Weber was talking about, and you obviously alluded to, is we've been able to, or let's say some of the larger institutions have been able to get out of a competitive zero-sum mindset into a more collaborative, frenemy sort of an approach, especially when it comes to urban consumers, right? Some of the larger financial institutions have understood that maybe they can't be all things to all people, and maybe they need to partner with certain kind of entities who bring in the capabilities that they may not have, or we take a lot of time to develop and hone, right? Unfortunately, because of a lot of investment, right, that a lot of large institutions have made in the past, across the rural belts of the country or across the non-urban parts of the country, Sugan was talking about priority sector lending, and banks have done a phenomenal job there. But unfortunately, what has happened is that probably solved the needs, for a couple of decades back. But today, we still do not have the banking penetration that really the citizens of this country deserve, right? So the partnership model, that thankfully, because of the pandemic and as a result of the behavior change in the pandemic, has come about, especially when it comes to urban consumers for large financial institutions. That's, I think, yet to percolate down to, when it comes to consumers beyond, urban areas. There's this bit of status quo is thinking, saying, what, we've done this infrastructure investment, we deserve to kind of reap that dividend now. We shouldn't have to kind of go to other players. So I think there's that bit. And lastly, without taking too much time, I think it's the social factor, that's something that we all kind of tend to miss out on. Financial services, financial products, I think, is one of the most gender skewed kind of numbers that we see anywhere, right? I mean, unfortunately, as bad as we are as a country in terms of participation of women in the workforce, when it comes to financial products, we are even worse than that, right? I mean, there is absolutely no logical reason to kind of figure out. I remember about a decade plus back reading a GSMA report on how the share of women owning SIM cards, right, was abysmally poor, right? Of all the metrics that kind of we made improvement on over a decade and a half, unfortunately, this is one space we've kind of left a lot of ground to cover. So I think the whole social challenges that we deal with sort of are translating to the whole financial inclusion era. So that's one of the bigger challenges. I think I don't want to be a doomsday prophet, but yeah, I think there's a lot of work that needs to be done. There's a lot of collaboration opportunity that exists, when you get outside of a Gurgaon or even get out of a Mumbai or a Bangalore. There is a lot of ground to cover, in terms of what we can do to ensure that this fruits of the inclusive development are spread more evenly. So yeah, I mean, I think it's quite a bit of a negative spiral I took you guys down to, but yeah, let's kind of get some reality check.
No, absolutely, Amit. It's somewhere it's so important to also really introspect and see. But thank you for your insights. But having said that, like even Diwali is around the corner, so I think everyone is making their wish list. So possibly this should be my last question to all three of you. So if you have to really look forward to the next 12 months, right? Maybe Sugandha, I'll start with you. If you have to look for the next 12 months, what is that one thing you'd like to really aspire and achieve for fintechs so that we are really propelling the FI mandate? Sorry, Sugandha, you're on mute, I guess. Yeah.
I was saying I will pick what Amit was saying. One bad experience somewhere else really spoils the whole image and the reputation and the business case for fintechs. So next 12 months, looking at even the fraud landscape, I think we are getting overwhelmed by that. A very strong focus on ensuring that we use our power of outreach to customers and to other ways, not just in, of course, taking our products there, but also educating them on what fintech is, how to do it in a safe way is important, because actually there's nobody else can do it. It's not just regulators' job, or it's not just industry body's job. It's everybody's job. And I would think that that collective network can really make a big push on that. So I will perhaps like industry collaborating a little more on educating customer on the safe way of lending, including borrowing practices.
Absolutely. Couldn't have agreed more. And Sugandh, we have also come a long way together, right? So the way you kind of mentioned that aspect of the fraud, and also we have seen what kind of challenge at times the industry faces because of the long tail, right? The kind of trust deficit which it creates, and maybe the problem of separating the lemons out kind of a thing has been a challenge. So for sure, point taken. Well, have anything from your side? What is that one thing in the next 12 months?
See, I think there is a lot of things happening, at the industry level with things like AA, OCAN, ONDC, so on and so forth. If there was one wish list that I had time, that was to have a fintech regulator, because fintech somewhere lose or they stay back because of that point, and they have to often rely on a lot of regulations that RBI send for release for banks and NBFCs, and do their own interpretations and then find out a method to engage. If there is a proper fintech regulator, then what's going to happen is there is going to be a method to madness. And I think, the distribution, the access will be much more faster.
Yeah, no, absolutely, absolutely. Couldn't have agreed more. In fact, maybe Sugandh, you also would resonate a lot with what Vaibhav would have said. Like, ask me as the SRO, maybe for the fintechs in different quarters, if it's on the, even it's on the lending side, we have come a long way from the part of the regulation which is more like rule based and heuristics. Now it has to be a lot more dialogue driven, and possibly absolutely the way you mentioned, Vaibhav, possibly the establishment of the SROs and how the collaboration is taken forward. Thanks, Vaibhav. So Amit, what is that one thing in the next 12 months?
I think Sugandh talked about the ecosystem. I think, Vaibhav was talked about. The only point, I just have to add to Vaibhav was like, I think fintech is a very, very large industry. Probably we need 5 to 7 SROs, RBI realizes that, one regulator is not enough. So maybe we need about 5 to 7 SROs, I think my last bit would be for the government. I think there's a lot of stuff that, we can do. The government's been very, very supportive, fabulous there. I think there's a lot to be done, in terms of, let's say, some sort of a GST relief across these micro entrepreneurs, in the rural parts of the country. And especially, maybe it's on the merchant acquiring side, maybe on devices, which help with financial inclusion. I think putting these down to, sort of a lower slab GST would definitely go a, long way in helping the cause of financial inclusion. So yeah.
Fantastic point, Amit. And in fact, you being in the payment space as well, I'm not surprised with the commentary. But yeah, thank you. So Muskan, I know we are like 120 seconds over time, but can we take 1 or 2 questions from the audience? I see some wonderful questions come by.
I'll just have to check.
Okay, and I'm
Quickly, we can take 1 or 2 questions.
Okay, maybe I'll take the liberty with the panels as well. So 1 or 2 questions. So first one is a little easy one. So Sugandh, you referred to the report. So the question from the audience is where we can get the report if it's in public domain.
Yeah, so it's not yet in the public space. We are finalizing it, and on the website, it would be available very soon.
So on the FACE website, right? So just for benefit of everyone, Sugandh, the URL would be?
So just go to FACE website. There's something called resource section. All our reports are available there. So you might find it there. Yeah.
Fantastic. Thanks, Sugandh. The other question is around collaboration. I know, Sugandh, you refer to collaboration and it kind of was omnipresent through the conversation. Maybe I'll take that liberty to respond to that question. Yes, collaboration is going to be key. And in what form and shape, like 2, 3 key aspects, especially from the aspect of the supply and the ecosystem standpoint. Ecosystem, as we all appreciate, right? There has been an intervention of the government and the public infrastructure in the digital space, DPI coming in. But it's also very important for the traditional large financial institutions like the banks and the large wholesale NBFCs, especially in that aspect of lending, if I may say, because that's where primarily my work is. That to be able to kind of have that kind of an approach where they can actually lend their capital and have that access to the capital and have a little more of a horizon view of the risk appetite, because the fintechs and the technology has made sure that risk is no more binary. right? Alternate is mainstream, and we can operate over a spectrum. So taking a lot more alternate view and appreciating that, how the collaboration both on origination as well as augmented underwriting can be, would be a very, very fundamental aspect, especially when we are talking about bridging the credit divide. Obviously, when you see the overall spectrum, even in the space of wealth tech, there are opportunities of collaboration, not just with the public infra system, but also between the fintechs. So if you see it as of today, there are certain early offshoots in terms of maybe a strategic partnership coming in, but there is still a huge headroom for the fintechs to collaborate with each other. Someone's core could be lending, someone's core could be payment, someone could be on the wealth tech side of it, but we are yet to see the fintechs collaborating with each other and coming across with a common placement. So when it comes to collaboration, these are the two things I'd like to kind of highlight.